Prince Pipes is the next company we are speaking with. They've posted a weak set of earnings. Margins have contracted to around 15% as compared to 19% same time last year. Revenues are higher, led by 9% volume growth. Mr. Nihar Chheda is Associate Vice President, Corporate Strategy at Prince Pipes and Fittings. He's joining us to take some questions. Nihar, great to have you with us here. Thank you very much. Just answer the margin question straight away. I mean, what is normalized margins for you going to look like from here out?
Sure. Firstly, thank you for having me on. And, in terms of margins, we've consistently stated that, 13 to 15% operating margins is what is sustainable on a long-term basis. Of course, because of volatility in raw materials, there are going to be quarters of inventory gain and inventory loss. That's just a part and parcel of the business cycle. But I think in the March quarter, what was heartening to see was the volume growth that we were able to post on a large base. And in a challenging business environment, the volume growth has been exciting to see, and that's where the focus will be on in the next few quarters as well.
How is demand right now, Nihar? What is the expectation in FY23?
Yeah, so if I have to speak from a sort of medium to long term, Sonia, I think the demand drivers are in place. Around 66% of our portfolio is towards building material, which is for plumbing and drainage pipes, which is directly dependent on real estate. And, we are all seeing that revival in real estate, which is why we've been able to post the growth in the March quarter. And I believe that this will continue to play out in the next few quarters, in the next few years as well.
There's an opportunity in the water tank space as well, because many of your peers like Astral have entered this space. What kind of revenue growth do you see here? What kind of investments would you have to make?
Yes, so we have entered this space as well around 18 months ago now. It is a allied product for us, and it makes sense because the distribution network, right from the distributor to the plumber, is exactly the same. So there are immense cross-selling opportunities. I think currently the focus is on expanding the manufacturing footprint across the country through an outsourcing model. So this will be pretty asset-light in nature, and this in the long term will show on the balance sheet as well.
Sorry, did you mention a number for volumes? You said focus very much will be on volumes. So what would that grow by in 23? What's the aim at least?
So see, internally as an organization, we're very aggressive in terms of outpacing industry growth and gaining market share. I think we've been able to consistently do that over the past few quarters. It's tough to put a number on it, but I'm sure we'll continue to outpace the inherent industry growth. Because of our focus on, it's tough to put a number on it, but I'm sure we'll continue to outpace the inherent industry growth. Because of our focus on, expanding the distribution network, expanding our product portfolio through, new product launches, and also heavily investing in the marketplace through branding activities.
Right, we leave it at that. Nihar, thanks a lot for joining us, and all the best for the quarter to come.